In this video, I'm going to show you the model that genuinely does not fail. Now, this is one of those models that every single time that I go into the market, I'm constantly looking for this setup. I'm constantly looking for this trade. Now, whether it's either subconsciously or I'm looking for it, this is the highest probability trade that I am constantly looking for in the market. That the reason why I'm saying it genuinely doesn't fail is because I don't have enough data of it failing because it works so well. And this is why I'm calling it the forever model. This is something that you should be looking for every time that you come into the market. That, in my opinion, is a high quality opportunity. And I want to basically tell you exactly why it's so high quality, like genuinely what the market is doing that makes this so high quality, and how to actually see this on the charts and what it actually looks like. Now, the forever model needs, number one, some sort of manipulation. So we need to see a liquidity sweep, either buy side or sell side, or we need to be in some sort of bigger time frame inefficiency, like rebalancing to a fair value gap. And then from there, we can look for manipulation, which we'll get into in a second. The next thing we need is an inverse fair value gap. If we are moving higher, we want to see us go lower first to manipulate before going higher. If we think we're going lower, I want to see us go higher first before we go lower. And that is when I'm looking for an inverse fair value gap, which is a fair value gap to get ran through in the opposing direction of the manipulation leg. After that, most of the time, I want to combine an inverse fair value gap with a change in the state. A change in the state normally will come after an inverse fair value gap because it's displacing through the inefficiency. And if it's displacing through the inefficiency, that means I want to see it also displace through the series of up close or down close candles. Now, next is an SMT, which is optional. Now, an SMT is normally the first thing that gets put in. So the SMT would actually be first on this list, or second, because we would want to be seeing that as added confirmation. Now, we don't need an SMT, but an SMT means it's A++ opportunity. And the last thing is we need opposing liquidity. Now, again, the market moves for 4 reasons: hunt liquidity, rebalance to inefficiencies, rebalance to equilibrium, and generate liquidity. So there's no reason I should be taking this trade if there's no reason for the market to move to where I expect it to. Meaning there needs to be either an imbalance or some sort of opposing liquidity pool that I'm targeting internal. Now, I want to draw this out and basically show you exactly what this trade looks like. Now, this is what a bearish example of this model looks like. Now, of course, the first thing that we're looking for is manipulation, right? But in an imbalance. So what's the exactly manipulation that's happening here? Well, we're back to OTE, right? We're in an area in which we expect to manipulate. What do I mean by that? I always say that, right? Because that's the first thing that's important. We're in an area in which I expect to manipulate. Why do I expect to manipulate here? Because we're at OTE. We're in a bigger time frame fair value gap. There's generated sell side below us, right? For us to move higher, or for us to move lower, we must move higher. So we have this big move lower. We rebalance to then set up for a move lower. So the next thing that gets put in is this SMT, like we talked about. NQ or ES, depending on what we're looking at, we're looking for a divergence in price, meaning this SMT is saying NQ did not make a higher high. In fact, it made a lower high, and on ES, we made a higher high. So on ES, we would have taken this previous high, and NQ did not. So we have an inefficiency, we have an SMT, and we have a stop rate now. Recent high gets taken. Then we're looking for, what we're looking for is what our entry would be based off of, which is our inverse fair value gap and a change in the state. Now, there's multiple ways to take an entry with this, though. You can see market runs through an inverse fair value gap, meaning there's a bullish inefficiency here that gets ran through to the downside, and it's in favor of the draw and liquidity, right? There's equal lows resting below us. It's in favor of the draw, right? We have a market maker clear sell model. This SMT is validating it. And now that we've had an inverse fair value gap and a change in the state, I can look to take a short. Now, there's multiple ways I can take this entry. I can either, number one, take it as soon as this fair value gap gets ran through, right? Boom, fair value gap gets ran through, stop at the high, target sell side, right? That's number one. Or I can wait for the pullback to the fair value gap, meaning if we were just to come back down to here and we pull back to the inefficiency, I can then take a short here on the inverse fair value gap once it's been ran through, even if there hasn't been a change in the state yet. But the best and most highest probability entry would be if there was already a change in the state and the inverse, and you were able to pull back to that. And that's normally the entry that I would be looking for, but there's multiple ways to enter it. So get displacement, inverse fair value gap, pull back to the change in the state or the fair value gap, whatever it is. And this is a high probability setup. Now, let's look at a bullish example, and then we'll get into some real trade examples. Now, this would be a bullish example of this exact same model, right? We have a market pulling back to an inefficiency, back to OTE of this previous big leg up, and SMT gets put in inside the imbalance. Internal manipulation here, recent low gets taken. We run through a fair value gap with a change in the state, again, in favor of the drawn liquidity. This is when we want to be overlapping price, right? Because you might be asking me, Justin, what time frame do I use? Price is completely fractal. It doesn't matter what time frame you use. It could be a 15 second, it could be a 1 minute, a 30 minute, a 15 minute, an hour, a 4 hour, whatever it is, price is completely fractal. Now, what you should be doing though, is if I'm looking for this model, there should be enough information to the left of me to tell me more reasoning why we should go higher. Now, what does that mean? That means that there's a bigger time frame buy side level resting above us, and there's more structure and more reason as to why we should go there, right? And this is how we can overlap models. And what this basically means is, for example, let's say this is a 4 hour time frame. If this is a 4 hour time frame, I want to be looking for this exact same model in areas in which I'd manipulate, which would be right here. We've displaced higher. This becomes my sell side. Then I would be looking for, look, this SMT at the low. There's probably an inefficiency here, or there's this breaker, or the change in the state. Then I look for the inefficiency to get ran through on this lower time frame right here. Once that gets ran through, you look for the inefficiency and you take a long. And that's another way to view it, right? You're always trying to overlap the biases. Now, let me show you guys some actual trade examples of this model. Now, this is an example without an SMT, and the reason I'm doing this one first is because I actually took this trade on Friday last week, and this is exactly what this model is. So as you can see, looking at this chart, we look at the bigger time frame. There's a reason for the market to go lower, right? There's sell side resting below. If I'm looking at the bigger time frame, we have a bigger time frame sell side level right here. And going into the morning, we have big displacement to the downside, and we pull back to an inefficiency. So we're back in the fair value gap. Then what? Manipulation. Internal high gets taken. Then what? Fair value gap gets ran through to the downside. Then what? Series of up closed candles right here gets closed below. So then, is there a reason for price to go lower? Yes, because there's bigger time frame draw resting below, and we have all of this generated sell side from the morning. All these equal lows, low here. We've done the job, manipulated higher. So then, what do you do as your entry? Wait for the pullback to the change in state or the inverse. Stop at the recent high, and you target sell side liquidity. Let's look at another example. Now, this would be another example, but it looks a little different. But again, it's still the same thing. Bigger time frame manipulation, right? Some sort of sell side liquidity is taken to the left of us. There's an SMT that gets put in at the lows. There's a 5 minute fair value gap that gets broken to the upside. Then we put in our change in the state, which is our last series of down closed candles. And we take a long, and we what? Again, target internal liquidity. Long, stop below the fair value gap, internal liquidity. And this ends up playing out beautifully. Again, looking at ES makes a lower low, NQ makes a higher low. Fair value gap gets ran through, and we run all the way to the internal buy side. Now, again, let's look at some more examples. Here's another example, again, with no SMT. We're looking for a fair value gap to get ran through and a change in the state. Now, what is a change in the state? Is the last series of up closed candles to get displaced and closed below. So what happens here is all of this low resistance liquidity that is happening and forming on NQ. We run all of it. If we zoom in here, we can see our last series of up closed candles is right here. And what ends up happening? 5 minute fair value gap. Both of these fair value gaps, because we always, if there's 2 5 minutes here, we want to group them together. Both of these get ran through with the change in the state. After buy side's taken, pull back to the change in the state. Enter short, stop at the recent high, and you target the opposing liquidity pool. All of these equal lows and resting generated liquidity that gets created on this move to the downside. Now, I want to show you and tell you why this works. Why are we entering after an inverse fair value gap? Because it's lack of order flow in direction of the opposing liquidity. Meaning, if we want to go higher and if the market is drawing towards buy side, Order flow is going to respect bullish imbalances. Every single time that we look in price action here and say, oh, fair value gap gets ran through to the upside. Oh, why does it get ran through to the upside? Because we're going to go draw higher. What holds bullish? This bullish fair value gap. We open up bullish, we hold it, we manipulate to the upside, right? Low gets taken for us to move higher because price must move lower for us to move higher. We go take the recent low, then move higher, manipulation. And then when we see a change in order flow, we see those bullish imbalances getting disrespected. This fair value gap gets ran through to the downside. The extra confirmation is the change in the state of delivery. And if we have buy side taken or sell side taken, and there's an inefficiency to the left of us, and there's a reason for price to go lower, again, zoom out. Order flow has been bearish this whole week. When you apply narrative, when you apply context to the way that you are viewing it, it is going to do nothing but continue to provide success for you. You have to align it though. This is not like, oh, you look for a change in the state and a fair value gap and you're going to be magically printing. Now, you will still get good setups, but when you can view to align the context is when you will fucking print. You have to align where is the market drawing towards because that's the logic. Trading needs to have logic. What is the logic behind why are you entering the trade? If we know the market is ran by an algorithm, which means we hunt liquidity, rebounds to inefficiencies, rebounds to equilibrium, and generate liquidity, then the reason I'm entering a trade must have that reason. Why is the reason for this? The draw on liquidity on the bigger time frame is lower. Why? Because all of the order flow is respecting bearish imbalances. We sell off, rebalance, respect it. We don't have a big move back higher, move lower, rebalance, right? The fair value gap, if I zoom out and I look at this move, every single fair value gap that gets moved to the downside here is all respected. There's no breaks, there's no anything. And we continue to sell off. And all of the bullish imbalances on the bigger time frame, you look at the 4 hour. 4 hour fair value gap right here, ran through. 4 hour fair value gap right here, ran through. Both of the bullish imbalances broke through, which means what? We're going to draw towards sell side. Look at order flow. So when you can learn to align this by intraday looking for SMTs, looking for manipulation, right? If you want price to go lower, look for it to go higher first and lack displacement. Because if we're going to manipulate, it means we're going to lack displacement. That is what manipulation means. Lack displacement. Every time that we manipulate, we lack displacement. Every single time. High gets taken. Why is this manipulation? We lack displacement because then what happens? We go to the opposing liquidity pool. Buy side swept. Where do we go? Opposing liquidity pool, which is the recent low. Oh, buy side swept. Recent high. What do? High gets taken. Build price, build price. But guess what? This high is continuously protected until what? The recent low is taken. Because then what? We generate liquidity, right? What is the market constantly doing? Oh, we're generating all of this liquidity. To then what? Set up for a manipulation. To then what? Go to the opposing liquidity pool that's already been built up. That's all it is. So low resistance liquidity, we build a range, we run all of that buy side, high gets taken, change in the state fair value gap, target the opposing liquidity because this entire move as well, we're not just generating buy side, we're generating sell side. To then what? Have a speed and efficient price action move towards the opposing liquidity pool on the bigger time frame as well. So the reason why this model is set up for that is because when you get a change in the state and an inverse fair value gap, it is the most validation. And if you were to add an SMT, it is the most validation for what the market is actually doing. That is the logic behind it. This isn't an indicator. This isn't support and fucking resistance. There's logic behind why this happens. And if you believe that it's not and you're like, Justin, you're full of shit, this doesn't work, then you simply have not seen it enough. It is literally blasphemy to say that I'm wrong if you haven't even put in the time to look at it. If you do it right now and listen to my words that I'm telling you right now, go in your charts and start back testing this. And if you actually go back test and you listen and you take the time to go look for this in your charts, you will be mind blown. You'll be mind blown. Now it's up to you to actually go do that. I've given you the tools. This has made me extremely successful. It is 12 days into January. We've pretty much only really had one full week of trading. I'm already up 25K, and every trade pretty much that I've taken that has worked out, again, all the other trades that I haven't taken, like any trade that I took on the day where I maybe overtraded, that was a less of a good setup, that lost me, every win that I've taken and everything that has made me successful in my trading the last, this is it. This is it. And this year, I will be sizing up using this model. I will be sizing up. This is my model. This is the forever model. this is it. There is nothing better than this. Genuinely. There's literally nothing better than this, genuinely. I've been doing this for 5 years. This is the go-to. This is it. Now, if you were to look at this setup and you were to say, Justin, what could be better about this setup? The only thing that could be better about the short that I'm literally showing you right now is this. That's what could be better. This is A++. 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 And again, this SMT could be this. It could be this. It doesn't matter. In SMT, in an area in which we already expect. That's why it's optional. But if this was to add here, it's extra conviction. There's a better setup. So I ask of you, go in your charts, look for this, test it, start executing it on the actual markets, and I guarantee you're going to fucking start paying. And I'm giving you this for free. I'm literally giving you this for free. I'm posting it on YouTube. This is for you. I'm not charging for this. Go out there and literally milk the markets, because you're going to start backtesting and you're going to be watching this. And you're literally going to be mind blown. So the forever model, there's a reason why it's called forever. You really don't need anything else besides this. Go trade it. If you take some setups, go tag me on Instagram, go tag me on Twitter. I want to see you guys taking the setup. Take some trades, at me on Twitter, at Justin Warline. Show me the trades you guys are saying, hashtag forever model, because I just gave you sauce. Go take it, go back test it. If you think I'm full of shit, go look for it in the markets, and I guarantee you're going to be eyes opened. So hopefully you guys enjoyed this video. I won't take too much of your time. Go back test it. Go right into the charts right now. Change in the state. Inverse. Now, if you're brand new to this and you're like, Justin, I don't know what an inverse fair value gap is. I don't know what a change in the state is. I don't know what liquidity is. I don't know what an SMT is. I have all those videos on my YouTube. Search for them. I have liquidity. I have manipulation. I have inverse fair value gaps. I have SMTs. Go look for all of it. It's all in my disc. It's all in my YouTube. Or you can join Tactical Traders and get all of that literally in front of your face, and you have literally everything you can need. And watch me able to live trade. You can watch me live trade every single day in my Discord. In the Discord, I live trade, do charting sessions, answer questions, and we're trading this literally on live. If you want to watch me trade this exact model live, like I did on Friday, click the link in the description. Let me help you. If you're currently struggling with over trading, you keep having a win maybe for 2 weeks and then keep giving it back. These are the things that we keep seeing in the community. You're winning for a couple of weeks and then immediately give it back for maybe 3 days because you lack the discipline to actually follow your rules. Maybe you don't even have the right system. You don't even have rules in place. You can't even trust yourself to follow them. You keep blowing up funded accounts right when you're about to pass them because you don't know what to do and you don't know what the problem is, or you know what the problem is and you don't know how to fix it. That is what Tactical Traders is for. It's for me to keep you accountable, kick your fucking ass, and literally make you the best trader possible. Like I have hundreds of students before. If you're interested about Tactical Traders, click the link in the description. Go backtest. Enjoy the rest of your day. I will see you guys in the next video. Peace out.